Hello, everybody. Joe Malone here, coming to you live on Dallas Trading Floor. Well, it's the day before the election. It's Monday, November 1st, and the market changed its direction on Friday. I put out an action trade alert, and basically, just suggesting maybe you might want to go all cash. I'm not all cash, but I sold a lot of my positions on Friday. Waiting for what's going to happen with the election. In the past, it was pretty easy because typically elections were resolved pretty quickly. I'm old enough to remember when you actually got the election results on the night of the election, but I don't think that's going to happen this time. I think it's going to be, it may be a Bush Gore situation. Where it wasn't really decided until December. So I hope that's not the case, but better to be safe rather than sorry because, it could be very significant in terms of what's happening. So I just kind of want to put this little warning up here. The market outlook was downgraded to a market correction on Friday, and all the major indices were basically down for the week with a loss of 5% each. So that means that investors should avoid new purchases, limit exposure, but it's okay to move 100% in cash during the correction and wait for the fall through day. So I will be definitely telling everybody when the next fall through day comes. But we kind of, hopefully I'm wrong here. Hopefully, I not right, but we may be in a little bit of a storm. So. We might want to be a little bit careful when it comes to deploying our positions. It's just one of those kind of things you have to be super careful doing that kind of thing because it can be very, very much of a pullback. And there's a lot of advantages in pullbacks because if we sell, we wait for the pullback to come back in. Sometimes we can do extremely well. I just want to show you a slide taken earlier today. And this is basically the Nasdaq, and it is in correction. It's just down slightly, but as you can see, we have two red bars in a row, Friday and today, as of when this was taken. So, we're looking like we're pulling back. The level on it is 10,901, and it's down about $10. But we're definitely in a correction. Not a good time to be putting in new positions right now. As the market is moving lower, but right now it fakes out. I mean, it pulled up a little bit today, and then and then down again. I want to show you this is interesting. This is the VIX, the volatility index, and this is kind of a interesting chart here that I want to show you. Basically, these red arrows are where you're seeing a marked change, and we just went through a marked change. It basically happened. It basically happened on Thursday of last week. There was an increase in volatility, then it pulled down, and then it came up again, and it came up again as well. As you can see, this is the 30-day, this is 21-day exponential, and it is trending up. So we are looking for at least through the election, we are looking for some more volatility based on these charts. So I just wanted to kind of give you a heads up on that. Also, I want to show you a very interesting thing. This is sort of a very other interesting indicator that I use a lot of times. It's called the high-low ratio, and it's the ratio of stocks that make their new highs to the stocks that make their new lows. Now, normally it's fairly well balanced, but you can see with this red arrow here, the last time it changed was basically when we came into that deep decline at the end of when it changed from in March 23rd, and that's when the ascent started, was where the low of this was made. We're not nearly there. We've got another quite a bit to go down. So if this moves down below this 0.5 level here, and then once that does, and there's a follow through day, then we'll know that the market is going to do a round trip and turn upwards again. But right now, it shows that we're going to see some more pullback in the market based on the high-low indicator and on the VIX. So those are two of the indicators that I like to use. Also, want to go through the SPDR really quickly here. The SPDR is the world's largest ETF, and many people have their entire entire net worth in this. I would recommend, at least until we're through this correction, getting out of the spider, because I do believe it may go lower. Now, it has moved up today, but as you can see, there's a lot of selling pressure here, and we may move lower. The critical number on this is 320. We're at 328 right now, so we're right above a very critical juncture. If it moves below 320, then we more than likely will pull lower. And as you can see, based on this, the low was made, and basically typically things will retest. The low was made on the 23rd of March of this year, and that it pulled all the way down to 211. I don't think we're going to pull that low, but we could pull easily to the pull easily to the 300 level, possibly below that. So it's definitely time to be very cautious in the market, because there has been a change in the overall direction. Now, even though the S&P 500 did show some strength today, and the Dow showed a little bit of strength, the QQQs are definitely off again today, and that's mostly where I'm playing. And this is where the techs are. They pulled back, as you can see. This is the second down day in a row. Typically, I want to see at least one update before I'm going to come back into the market, and that's definitely not the case here. We're probably due for another pullback on election day, and then we might see a little bit of a dead cat bounce. But the critical level on the Qs, we have breached that. The critical level on the Qs is 275, and we're below that. So I do believe that we may go lower on the technology issues. That's just basically what that's telling me there as well. Just want to show you my current holdings. As you can see, I've pared them down considerably since last week. I'm still in Cloudflare. It's down today. I'm in Qualcomm. It's off a little bit. I'm in the GBDC. That's the Grayscale Bitcoin Trust. That is down as well. And I'm in Tupperware, oddly enough. So I have basically sold most of my, most everything else, and I am awaiting kind of the election results to see kind of where that is going to head. So without further ado, let's take some questions here on the questions. So thank you very much for holding on and being so patient. Let's see. Okay, so basically, is the tech rally over for now? I think it is. The FANGs are down, and what's the best way? They will chug along, just a typical sector next few months. I agree with that. I agree with that. I think we have to kind of wean ourselves off of totally relying on techs to make hay, even when it changes the market. That's one of the reasons why I went into a position in Tupperware, which showed very good results. So let me go to to TikTok. Thanks for holding on here. Appreciate everybody. Yo. Absolutely. Okay, so let's look for the first question. NIO, very interesting. Thank you for bringing this one up. NIO is showing actually a lot of strength, by the way. And this is, of course, this is the Chinese Tesla that a lot of people, and I have had this one on the watch list. This is probably going to go back on the watch list. It's showing some very, very strong action here. And of course, it's not nearly as dependent. It's dependent really not as much on the American market as it is on the as on the Chinese market. This is the number 2 Chinese automaker. Now, there's one issue here. It's got to earnings in 15 days, but it's up $2.47 right now, and it's looking like it's pulling up very, very nicely. We have a good, if I can show it here on the chart. Let's see if I can do that. There we go. Oh, come on. Well, temporary. Put a temporary line in here. There we go. Yeah. So we do have a potentially moving up. Now here, the reason I put this chart on here, I'm going to kind of draw the channel, is because we do have a situation where we do have a channel here, and we're at the top of the channel right now. So I do suspect this thing will reverse lower and then move up. It will probably reverse down to about 29 or so. But it is definitely in a channel, and it's looking very good. It's got a relative strength of 99. Now, I wouldn't recommend putting my toe in the water on this one. Well, one of the good things about NIO, I will say, is that they don't really have any significant sales in the United States, so they're not as affected by tariffs, and that's a good thing. It has a very strong checklist, 8 out of 9, which is definitely very good, and it does have increasing fund ownership. So this one is quite good, NEO, and it probably will go on the watch list. The watch list here, because it is showing a lot of strength, and coming, it does not depend on U.S. sales. Now, the interesting thing about NEO is that they did get authorization to start selling in Europe, and I think that's very, very significant, because I do think electric vehicles are going to be very big, but I don't think that, I think until the Berlin plant is built with Tesla, I think that we're going to have a supply constraint with a lot of the Tesla vehicles going into Europe. Why does everything look today like we're in downtrend? Okay, why does everything look normal today when we're in downtrend? We'll be in trouble with the election. Well, absolutely. I know that it's tough. When something changes, when the direction changes like this is one of the toughest things in investing, is knowing when to basically, when to basically hold your cards, when to fold them, and not play out the hand. Just like in poker, sometimes you just have to kind of just wait. You just have to wait until you get the right hand. Right now, I don't see enough strength in the market to go in, with double barrels. But, because the market definitely has corrected. So this is a very tough period. Usually is when there's a market change, either from an uptrend to a downtrend, or a downtrend to an uptrend. It's very hard to call it, because, just the minute you're getting out of the market, it will show some strength, then you get back in, and then you get whacked. But trust me on this one. I think we want to wait for a fall through day. When we have a fall through day, that will connote the change in the direction of the market from a downtrend, from a correction to uptrend. And right now we're in a correction, and that is a technical term, by the way. That means that from the high to where we are now, it has retreated a minimum of 10%. Now, can it go lower? Absolutely, because typically the lower it goes, the lower it wants to go, until there's a capitulation and it moves higher. So I think we just have to be very, very careful about putting on positions right now. And even though, we've seen some strength, I think we have to be very, very careful in the market right now. Very disappointed with the Desik, for absolutely no reason for the shitty performance. Well, here's the thing. I mean, I know, Christian, that's tough, but when we get a change in these markets, this is the secret of the market, of doing well in the stock market, is taking your gains when you can, and then sitting on the sidelines and trying not to lose. And then when the uptrend comes again, then going into the market, because most of the money is made on uptrends. Now, of course, we can do short selling and stuff like that. If we are in a protracted downtrend, then short selling will come into it. But right now, I think we have to be very careful, and we just have to be kind of de-risking right now, and then possibly moving into the market when the market changes direction. Okay, I'm in catch. This is SQQQ. Okay, this is a very good idea to be. The SQQQ is a vehicle that will short the market. Now, here's the thing about it. It can turn on you very, very quickly. So this is sort of like a hot potato. It is up today 29 cents. Basically, which is very, very good. But don't count on this one, because all this takes is a reversal, and you can use a little bit of money. I want to see a little bit more strength here before I go into the SQQQ. Right now, it has a relative strength of 2. Last week it had a relative strength of 1. So it is moving in the right direction, but it's just at the very beginning of that move. So be quite careful on this. This is nothing really more than a hedging vehicle, and it's not a long-term investment. So you can make money, and if the market is moving sharply lower, it could be an excellent investment. But always keep an eye on it and be ready to jump out of it, because it can reverse on you, and it can be really, really ugly if it does. Is Fetch a buy now? Can we purchase after the election? FTCH. Let's look at FTCH real quick to see what we've got. FTCH is the symbol. Oops, let's get that right. There we go. Farfetch Limited, interestingly enough, end-to-end technology platform that connects to the luxury fashion ecosystem worldwide. Interesting. I didn't know about this one. It definitely had a very nice movement up. Its earnings are in 10 days, so somebody likes it. 97 is the relative strength on it. Let's look at the checklist. It's a good checklist, 7 out of 9. That's definitely buyable. And let's look at the funds. Okay, it's 99% funds. That's probably why I've never heard of it. Very interesting. Well, this might be a winner. I would wait on this one. I would just say wait until the election, happens, because that's going to depend. I mean, on probably if Biden wins, there will be a easing of sanctions on the Chinese, and that might very much will affect this stock. So we don't know how that's going to play out, but definitely looks very good. It definitely has a good checkup. So very, very good. Thank you for that. FTCH. Let me put that on there. FTCH. I'm going to definitely put that on my list. Thank you very much for that sharing with that. Very, very good. CZR and MGM, please. Let's look at CZR. That's Caesars. Here's the problem. I'm just a little bit worried about the gambling stocks right now, because I just see with the COVID thing happening and without the reopen, I just don't see them doing well. And I want to show you this chart on Caesars. We do have we had a sort of a consolidation. It moved up a little bit, but now it's pulling back below the 50-day line. I don't like this right now. It's got a relative strength of 92, which is good. Earnings are in 3 days. I wouldn't buy this thing, even though it is strong, because I just don't like the direction of this checklist. Okay, it's 5 out of 9. I can't recommend it. I can't recommend CZR. I just don't think, until we see some strength in the gambling economy in Las Vegas, I just don't see it. I think it's going to be tough. MGM, that also is a gambling stock, of course. Everybody knows that. It's MGM Resorts. Very, very good company, very well run. But again, the problem in Las Vegas is there just isn't enough people going right now. And as you can see, we have a downward trending line there. So I can't recommend this one either. It's only $20, but it's got only a 44 checklist. So 4 out of 9, that doesn't make it for me. Also, on the ownership on the funds, it is going down, not very much, but just slightly. So again, with a relative strength of 70, I can't recommend this one. If I had to choose between MGM and Caesars, I would probably take Caesars, but I don't like either of them, unfortunately. It's just not a good time right now. I know this is painful, because it's a good suggestion. It's just not the time right now because of the way the overall market is trending right now. I just don't think it's good for anything we're doing, anything related to travel, tourism, gambling, but only gambling online, DraftKings and Penn National. PayPal earnings today after call. Let's look at PayPal. Here's the thing. If you have PayPal right now and you can sell it into the earnings and then see what happens, I do think it's trending lower, and I'm not saying it's going to fall off the cliff. That might be a good buying opportunity after it might be a very good buying opportunity after the earnings call, but I just don't think it's right now time to be in it, into earnings. It's just it's got a relative strength of 99. It's a great stock. It's got a cup and handle formation, but here's the thing, and it can turn around very quickly, but on this one, I would be selling it right now, because I do think it may pull lower after the election. Now, I think it will turn up, though, because I do think long-term it's a very, very good stock. 8 out of 9 on the buying checklist, so that's excellent, and it does have increasing fund ownership. So basically, this is a very, very fine stock. The thing is, I just think in the short term, I think you want to protect yourself a little bit with some of the potential losses that you will have coming into an earnings season on it. So that's my I'm kind of being negative today, and that's not good. I'm normally not negative, but that's the kind of thing. Okay, Apple is a buy. Okay, let's see if Apple is a buy. Apple, I think that the the new iPhone 12 is going to be 5G iPhone is going to be a transformational product, but I just don't like to buy a chart that looks like this right now. I just don't like it. As you can see, we're pulling back. I think we've got to see a turn on this, and hopefully we'll see a turn up at about, the 103 level. But this is currently the trend right now, and it doesn't look, promising. We have a downward trending chart here, and with a 90 relative strength, it's been losing a lot of relative strength as of late. It's also been losing some, just 10 of its funds. But, it's still a great stock. It just doesn't have the checklist that I want. It's not at the right point to buy it. It's 5 out of 9, so 6 out of 9 is my minimum. I can't recommend this thing until it moves a little bit lower. I do believe that if we hit about 103 and we see a turn at 103, it may be buyable. But right now, put it on your watch list. Don't buy it. Just not a good time. It's too uncertain going into the election. All right. When do you think there will be a upward trend? When do you think that'll happen? Well, that's a tough one to say. But I'm gonna flip over here to the spider, and I'm going to show you that live, real time. We are, as hard as this is to believe, and I want to show you this. This is the spider, and the reason I use the spider is because it's a very, very large index. Now, actually, since we made the March low, it's 218.26. That's the March low. Actually, it did briefly go down to 211, but it popped up at the end of the day on March 21st. It was 218. So we actually, believe it or not, are still in an uptrend. Okay, if you can believe that. Now, but we have pulled back, and what we're talking about here, and we have been for the last basically, 2 or 3 weeks here, is this trend, and this trend is down. So, do we have a reversal on this? I don't know if we do or not. I don't know if we have a reversal here. I think it's too soon to say. I think what we're going to have to do is wait for what they call what they're going to call a follow-through day. We're going to get a follow-through day, but we're in the future, but we don't have one now. So now is not the time. And the question is, when will the next follow-through day happen? I cannot tell you when that's going to happen. It may happen as little as a week. It may take 2 or 3 months. So we don't know, depending on the outcome of the election. But right now, it's it's not necessarily a great time. 3 ticket. If Trump wins 3 and 3 of if Biden wins, this is a tough one. I think that some of the stocks are going to do well anyways, but definitely if there's a Biden win, the healthcare issues will do better because they will escape having to compete on price. The one of the big issues is that the hospital sector has through its basically control of Congress has been able to escape any price regulation, and that's been a big issue. That same is true with the drug companies. They've been able to basically charge what they want, and so if Biden wins, there will be probably the healthcare issues will definitely do better. There's no question about it. Now, other than that, I can't say. Many of the oil and gas issues aren't doing quite as well as they have been. We do have an oil glut right now, and that's part of the issue, mainly because of fracking and other things that we've been able to supply a lot more oil than we would have normally if we weren't in that position. But the good part of it is that people in Pennsylvania and Texas are actually getting jobs in that field, believe it or not. So it's that's kind of the way it is. Can you do Apple? Okay, well I went through Apple. Let me come back to that. I did go through Apple once. Hi Jim. What about LL? Thank you, Wendy. Let's look at Lumber Liquidators. Lumber Liquidators probably will do very well coming, because a lot of people are staying at home, and and it's been on it's been on the watch list. I did have this in the small portfolio. It's pulled up very nicely. Interestingly enough, it had really good earnings. 805%, and there was a large buy here. This is showing some very good promise, I think. Right now we've got 7 out of 9, which is good on the checklist, and we do have some good funds in here. So, it's looking pretty good on Lumber Liquidators, I have to say. It was in the small portfolio a while back, and I did have it, but I got shaken out of the position. Let me see if I still got Lumber Liquidators on the watch list. So let's see if I have. I can't remember if I have that in there. Taiwan Semi. Yeah, there it is, Lumber Liquidators, and we've had it on for a while. We're pretty, it's a little bit below its buy point at 29.59, but it's at 25.50. So it's definitely seen a lot of strength. So this is definitely still on the watch list, and I don't think it's ready to buy it right yet, because I want to see it move above this 28.48 or thereabouts. Because I want to see it move, but it's got a very nice cup and handle formation. So this is definitely one to keep on your list, because I do think in the new year this could move higher. If it moves above 28.48, then it will have changed direction and moved higher. But be very careful buying in this kind of environment, before the election, because it just, we have a correction going on right now. So in a correction, 8 out of every 10 stocks are going to lose money, whereas in a confirmed uptrend, many more are going to be winners. So that's the one reason why you want to be careful putting on positions. If I put on any positions, and I'm not recommending this, I wouldn't putting on any more than a half position currently on anything, just because of it's just better to be careful. Let's look at Tesla. I've been sold out of Tesla. I got taken out of Tesla, unfortunately. I will probably be back in as soon as it shows it shows a bottom. It isn't showing a bottom though, and this is a little bit concerning here. If you'll notice, every time it's pulled back, it's pulled right back up. Now the question is, what is it going to happen after this? It hasn't reversed trend. See, this is the main issue that I have right now with it, is that it has not reversed trend. This is currently the trend right now. It is a downward trend, as you can see. It's a downward trend on this. So I want to wait until there is a reversal on this before I would buy it. Now, once it does reverse, and I do think it will, and I'm looking for the reversal to happen right about at this level here, at about the 351 level. Once that happens, I do believe that it will move higher. Now, the question is, what is it going to do tomorrow after the election? I do think we're going to see another pullback for Tesla. So be careful on Tesla. Watch list is what I'm going to put it on the watch list, and just have to be careful and wait a little bit of time on this one. I think that's just kind of the way it's gonna play out. Okay, Apple. Is Apple a buy? I don't think so. Currently, I don't think Apple is a buy. Wait until after the. I think it's time to wait a little bit on Apple, and I think it will be a buy once again. It's about trading at about 108, and if it looks like it may move down below 103. If it moves below 103 and reverses higher, then it's a buy. But right now, I don't think you can buy Apple. I think it's moving. I think it's moving the wrong way. What about ExxonMobil, XOM? Let's take a look at XOM. XOM, as you know, cut their dividend. This is the first time. This is a very, very bad chart. And I show you why you don't want to buy this one. Take a look on the screen. And by the way, if you're looking on TikTok, I'm broadcasting these charts live on Dallas Trading Floor. Basically, just go to youtube.com/Dallas Trading Floor. And this is episode number 165, so you can see this. This is a terrible chart, as you can see. It's just not getting any love here. It's moving from the upper right-hand corner to the lower the upper left-hand corner to the lower right-hand corner. This is the this is the direction of the issue right now, and this is solidly down. We have a solidly down trending issue right now. It has a relative strength of 6. That is terrible, and it's got a terrible checklist. 3 out of 9, 6 out of 9 is my minimum to buy on the checklist. The fund ownership is decreasing. The funds are liquidating their position. We may have a situation, even though it's only a $35 stock, it may be very close to being in a situation where it was shorting. It was a short. I want to show you this a little bit on the on this, because it moved up to there. You see, that is the head, and then this is the shoulder here, and then this is the other shoulder here, and the best time to short it is basically when it's pulling. It's going to pull up about here, and that will be probably a very good short at that point. But it looks as if we have a situation where if we're continuing in a downtrend, then we want to start looking at possibly shorting issues of stock. This is one, definitely ExxonMobil may be in that category, because it is there's a lot of funds in it they're going to have to sell, and that may be a good opportunity. There was some buying activity today, and some selling and selling as of but right now, ExxonMobil is not a very good issue to be in. It's a very, very weak stock, very, very weak stock. What about Google? Let's take a look at Google. Of course, that is Alphabet, but the symbol is GOOG. There's actually 2 classes of stock. There's a common GOG and GOGL, which is the Class A stock, which isn't. Now, this is actually setting up very nicely. It's not a buy before the election, but it may be afterwards. It's got a relative strength of 81. It's pulled back a little bit. We have a good checklist here, 8 out of 9, so that's definitely viable, and we have a lot of funds that are in it. It looks as if, believe it or not, Google may be a very, very good buy. This is a cup. This is an excellent formation. We do have everything is above the 200-day moving average, so we've got a good trend on that. The critical thing here is the 21-day exponential has moved above the 40-day, and the 10-day is above the 21-day. So this is all set up very, very nicely. We did have excellent earnings on it. It's up 24%, if you can believe that. It's also one of the biggest companies in the world. So this is probably after the election. This might be on your watch list as a buy, even though it's quite expensive at $16.26. But I do believe this is a buy potentially after the election. Google will be. All right, so let's see. Okay, so next question here. What do you think about ABBV at the moment? Is it a good time to buy or long term? Let's look at ABBV to see if I can give you any insight of that. ABBV. Okay, immunology. It did have a pull up here today, but I don't like this chart. I don't like the trend on this chart. It did pull up today. There was some heavy buying, had some good earnings per share. Let's see if it reverses its trend. But its trend right now is not very good. Its trend is downward, even to today. It did move above that, but this is the trend. We always remember, especially in a market in correction, we always want to buy with the trend. We never want to buy against the trend. If we were to buy this right now, we would be against the trend. Now let's see if it moves up. If this begins a trend and it moves solidly above the 200-day moving average, then we might have the beginning of a new trend on this. But right now, this is a watch list at best, because the trend is the wrong direction on this. The trend is downward on this stock right now. It's a downward trend, and not a good time to buy it. Unfortunately, it's only got a relative strength of 46. Typically, my minimum on this to buy something like this is an 80. It does have it does have good fund ownership. It is decreasing slightly, but it's quite good. The checklist is also excellent, 7 out of 9. This is a watch list and not a buy, but it's a good stock relatively. But I just want to see it turn and make a turn on the trend. You always want to try to buy with the trend. No, don't try to buy at the lowest price on anything. Try to look at the charts to see when the trend reverses, and then as it's reversing and moving higher, that's when you want to buy it, not when the trend is going lower. So we always want to buy an upward trending chart, and that's not right now. A BBV is not an upward trending chart; it's a downward trending chart. All right, so let's see. Okay, thoughts on SWBI? Let's look at SWBI real quick. SWBI. And this is Smith & Wesson. This is always a favorite around election time for some reason. I guess people think that people are going to stock up on guns. I don't know, but it seems to be. Right now, would I buy this chart? Yeah, it's an okay chart, 97 relative strength. It's got earnings in 35 days. Yeah, it's an okay chart. I wouldn't rush out and buy this one. 7 out of 9. It's got good fund ownership. All in all, it's a good stock, and it does have it does have an upward trend. It's not a significant upward trend. Let's look at the weekly to kind of show that. Yeah, we definitely have an upward trend here, as you can see. So we have an upward trend. We're on a cup here. This is a classic pocket pivot. This might be buyable after the election. If we continue to see a movement up, I would want to see this thing. I don't think I would buy this until I got to at least about a $21 price, because right now it doesn't show that. It shows a price that is under, is under that. I want to see something that's making a new high with an upward trend to buy, especially in a down market. So that's it's a watch list. I would wait for that. See if it confirms above 21, and then you might have something in the towards the end of the year. Bank of America. The bank stocks have not been doing very well because of the low interest rates. It's just very difficult when you have low interest rates for these money center banks to make money, because they can't lend because of the credit quality, and then on the other hand, they have capital to lend, but they can't lend it because of the credit quality. All right, here we go with Bank of America, and as you can see with Bank of America, we have basically a 24 relative strength rating. I like to buy them at least 80. I don't want to see a 24. That's too little for me. It's got a downward sloping chart, so that also is not the way we want to be. So this is how the chart is trending right now. It's trending downward, so we don't want to buy something that's trending downward. Now it may reverse, but before it reverses, I want to see it. I want to see it basically above this line here. I want to see it come above about 34 before I'd even consider buying that. So right now, I cannot give a green on Bank of America. It just isn't good enough as a stock. All right. So what do you think about PSQ? Well, let's look at PSQ. PSQ. ProShares QQQ. Okay, this is similar to the to the SQQQ. It's very similar. This you can use these in when there's a change in the market direction. We have seen a little bit of an uptick, which is good. I do like we do see a little bit of an uptick. I like the PSQ a little bit better right now than the SQQQ. They're essentially the same thing, but it's just that the PSQ has a higher relative strength at 16. So we definitely could see a movement. It looks like it is moving higher. Now, I would be very careful about holding this one. I wouldn't hold this. If there's a turn, this can move very, very fast. So right now, I would be, I could see a half position on this one. But again, I would be very careful, be ready to jump out of it on the minute it turns. If we do see some more volatility, though, it will perform fairly well. So that's an interesting one. Thank you for that. Thank you for that. The RWM. Let's look at the RWM here. RWM. Let me see if I can give you a good view on that one. Okay, this is essentially the short Russell. This is a broader based. This is obviously a broader based issue than the PSQ. This is a little bit more broad based. It does have a higher relative strength. The same kind of thing on this one. I just can't really. 4 and a 9. That's not really good enough for me, and not enough funds. Now, of course, this is going to be this is going to be an ETF, so it's a little bit different criteria than you would have for an individual fund. Out of these two, out of the RWM, I think you're better off with the PSQ. To be honest with you, I think it's a better bet. Now, the thing about the Russell is the Russell 2000 is one of the largest measures. The only thing bigger is the Wilshire 5000, which is basically the whole market. But the Russell 2000 has a lot of small banks in it, and they are not doing well. So if you were to move against the, if you were to use the short Russell, that might not be a bad one because of the number of small banks that are in the Russell 2000 that are basically, they make up a lot of it, and I don't think they're going to do well coming into the next year. So my opinion there. Okay, so let's go back here to see. Should I invest in Google? Okay. How about INSP, Inspire Medical? Let's see about that one. INSP is the symbol, and that's Inspire Medical Systems. And let's pull the chart up on that. And by the way, if you're looking on TikTok, it's super easy to see the charts and everything. It's just have to jump it over to youtube.com/Dallas Trading Floor. It looks as if we have changed in direction here a little bit. The earnings per share is due on 11/2, so it's basically due tomorrow. And we do have a little bit of a change in the direction on it, but it does look good. It looks like it may go higher if it bounces off this. If it bounces off the 40-day moving average. Let's see kind of how it looks. The checklist is my minimum. It's 6 out of 9, so that's looking pretty decent. That's definitely viable. And we do have increasing fund ownership, so those are two good things. It's currently 82% of this is owned by funds, so it's definitely funds are interested. It's up $2.32 today, so this is very strong. Going into earnings, I definitely think you could buy this one. But I wouldn't buy it until I saw a turn on the 40-day. But other than that, checkup looks good. So I would say after the election, I wouldn't buy it into the election. Let's see what happens to the overall market. But I think that Inspire Medical, that looks pretty good. That looks pretty good to me as well. Thoughts on NEO? Wait a minute. Let's take this question first. Is it a good idea to keep buying when stocks pull back? The answer is no. The answer is no, and here's why. There's an old term. It's called trying to catch a falling knife. When stocks start to pull back, you don't want to buy in the pullback. You want to buy in the reversal. So, stock were to pull back to say the 50-day moving average, and then reverses higher, then you want to buy it on that reversal. But you do not want to buy on dips. You do not want to buy on dips. A lot of people on CNBC will say buy on the dips, income averaging, all that. That's wonderful for them. The investment horizon for Warren Buffett is basically infinite, but it's not a good way to buy stocks because stocks that tend to reverse and go lower tend to go lower. So you want to buy them on an uptick. So I would not recommend that. I just would not recommend that. I know that everybody says that, but it doesn't work out in the long run. Thoughts on NIO? I did go over NIO a little bit. I do like NIO a lot, actually. It looks as if, and it's been on our watch list, and it still is, by the way. We're not at a point where we can buy it at the moment, but we're getting there. And I just want to go over the NIO chart again. Some of the best stocks are going to be the Chinese stocks, at least for right now. It's got a 99 relative strength, so it's looking pretty strong. It's looking pretty strong. It's marching right up this. It's marching right up the. This is the channel right here, so that's a very good channel, and it seems to be marching right up that. That 21-day exponential. So I like it. 33.03. It's up $2.45 today. Is it viable at this point? I do believe it is. It's got an 88 checklist. That's pretty darn good. That's 8 out of 9. So where is there a place to buy this? Well, there isn't really a chart. It isn't really a chart area to buy this on. Let's see if I can go to the monthly charts to kind of get an idea. Wow, it's just really taken off. I do think that where you could buy it is on a pullback to the 21-day exponential, and that's right about there where I marked it, and that's about $30. So if this thing pulls back to about $30 and reverses, I think you've got to buy on NIO. So I like NIO a lot, and I'm going to put that down on my list as one to be in potentially, and that'll be up on the small portfolio. Just wanted to show you, this is my small portfolio, and I have a watch list here that I maintain, and it has all of the things that I'm looking at. Zendesk was a breakout, by the way. Just because of the market position, I did not put any money in this one just because of the way the market chained on me. But Zendesk, this one broke out, so this was nice. This went, this one basically moved very nicely. So this is the watch list here, and then I show you kind of on my small portfolio where I'm invested and what in. Currently, as you can see, mostly in cash right now. With everything, actually, interestingly enough, everything I've got is up, which is interesting. Tupperware has been doing well as of late. I don't know why. I don't know why it is, but it has a very good chart pattern. I'm basically in Qualcomm, Cloudflare, Grayscale Bitcoin Trust, and Tupperware, but mostly I'm in cash. So I'm sort of trying to be more in cash. Now, if you'd like to see this and get a link to this so you can see this anytime, just easy to do. All you have to do is jump over to www.DallasTradingFloor.com, and I will just bring that up right now. www.DallasTradingFloor.com. There we go. And this is how it looks for everyone looking out there. This is how the site looks. If you want to get on the list for the small portfolio, super easy to do. Just go down here. I'm kind of pull it down here. And it just gives you a link, first and last name and the email. Hit that submit. It's all free, and you'll get a link to that. Also, if you want the free trade alerts, and I typically will do this when stocks break out or there's a special event like, for instance, the market changing like it did on Friday, I'll send out a trade alert. But you got to be on the list in order to get it. And the way you get it, of course, is first and last name and email, and then hit that subscribe button. And if you're looking on TikTok, very easy to do to get the, to get the action trade alerts. Just go to my profile, hit the link. You'll be taken directly to the site with for both the action trade alerts and for the free link to the small portfolio. Also, I have 30 days worth of YouTube videos over here. It's on the YouTube tab, and you can see that as there we go. It's filling in right now. So there we go. And basically each one is right up here, so you can quickly just go to anyone that you want here, and that's an easy way to do it. Also, if you want to learn how to trade the Can Slim way, and this really is the best way, by the way, most of the top traders in the world are CanSlim traders. I certainly am, and I found out about the CanSlim method about 30 years ago, and I have been studying it ever since. Believe me, I have an MBA, and I've worked as a financial analyst for a lot of very big companies, Fortune 500. But I tell you, if you just can do anything, this is better than an MBA. Go get this book. It's called How to Make Money in Stocks, A Winning System, Good Times or Bad. And then also, you probably want to also have the companion book too, How to Make Money in Stocks, A Winning System, Good Times or Bad, Getting Started. It's sort of like the Cliff Notes. And it's a great book because it will tell you kind of what I'm talking about here with follow-through days and, how to read charts and everything like that. It's very, very good. It's probably one of the best books for technical analysis that I've ever seen, and it's not very expensive either. And it was written by William O'Neill, who is probably one of the greatest technical traders ever to live. He's in his 90s right now, but his system has probably produced more champion traders than any other system out there. So that's just a little plug there for that. All right, thoughts about CATB. Let's look at CATB. This is Caterpillar B, CATB. Let's see if I have anything. Nope. No, I'm sorry. Catabasis Pharma. I don't know this one. But here it is, and let's take a look at it again. Pharma stocks, it's just going down. Something happened here, and it wasn't good. It has a relative strength of 1. Run away from this thing. This is terrible. This stock is really bad. It's off of 84%. Just a terrible stock. Just don't even consider this one. Oh, this is horrible. This is horrible. It's got a checklist 2 out of 9. That's just about as bad as you can get. Terrible stock. Don't even consider this one. Terrible, terrible, terrible. Sorry to be a party pooper, but if you've got any money left in that, sell it now because I don't think it's coming back. It just doesn't look good. Just doesn't look good. Reversal entry. This is interesting. Thank you. Reversal entry for Zoom. Let's take a look at Zoom. Zoom, of course, anytime something goes up like this, it has to pull back, and that sometimes those pullbacks can be very good. I think Zoom is they've really taken over the meeting space. Let's see if it pulls back and it reverses. It's definitely pulled back, but let's see if we can find a reversal point on this. This is a very good call, by the way. Thanks for this. On the weekly chart, you can see we pulled back to the 21-day exponential. This is a lot of times what will happen is the stock will move very, very sharply up, and that's definitely the case here. We moved very, very sharply up, and then we had to reverse down. And, of course, this is the reversal. Now, many times one of the best places to buy a stock is when it bounces off of this line here, off of that line. So I definitely think this is a potential for a reversal. Where I would see buying this one, let's see if it pulls back down to about 425 and then reverses. If it does, then we might have something. We might definitely have something. I don't think that Zoom is definitely it's moved very high, but I don't think I think it may have some more room to go here, actually. So let's take a look at people on TikTok. Big C. Sorry I had to drop. Sorry, I had to drop it if you covered this. I haven't covered Big C. I will put Big C up on here right now. Looks as if Big C. Let's see what happens with Big Commerce. It's pulled back as well. Let's analyze this one really quickly. See if we can get something going on here. It's pulled back. These IPOs are tough because they don't. I really don't like to buy an IPO until it's been out for at least 3 months because that gives it time to season a little bit, and that definitely has not been the case here. It's not. Unfortunately, this is not buyable right off the bat because it's only 5 out of 9 on the O'Neill checklist. So I can't buy this one right now. I just don't think it's there. It's only got a relative strength of 61. It just, unfortunately, it doesn't meet the criteria. It's watch listable, but it's not buyable, unfortunately. It's got some phone ownership too, so that's interesting. I mean, I think this one maybe in the future do well, But if the stimulus passes, this probably will move up. But right now, I cannot recommend Big C. Unfortunately, it's just not strong enough. There's other better fish out there. Okay, so what's the buy point for Amazon? Let's see if I can find an Amazon buy point. I think Amazon may be doing, maybe when the market changes direction, Amazon is definitely going to be one of the first ones to change direction. It's off today. $31, but it definitely can move higher. Relative strength is 89. That's very good. We're still looking pretty good on the checklist, 7 out of 9, and the ownership is it's increasing. So yeah, so everything's looking good. The only thing is we're in a downward trend on it. We've got a cup, and that is a good chart pattern. But the question is, where is the buy point? So let me give you a buy point on it. The buy point still hasn't changed. The buy point on Amazon, 33.44.29, and it's been that way for about a week or so. It's been below that. So AMZN buy point is equal to 33.44.29. So let me put that out there on the chat. And by the way, if you're looking on TikTok, I just put out that buy point for Amazon, 33.44.29 on the chat. And you can see the chat on YouTube at youtube.com/Dallas Trading Floor. So we have a few more here. Which stock? What about Zoom? I think Zoom is going to pull back, and then on the pullback, it might be a good buy. But right now, I don't think you want to buy it. It's pulling lower. Same thing with Google. All right, so sales are huge on Tupperware. It's true. Tupperware, thank you very much. I don't know why, and I'm not even a Tupperware kind of guy. I'm telling you, I'm not a Tupperware kind of guy. But Tupperware is in my small portfolio, and I want to show you that really quickly. It's in my small portfolio. It just seems to be doing great, and that's right here, Tupperware. We bought it basically on the 28th, and so we've had it in just a few days. It's up 7% in a very questionable market. So I don't know. Tupperware is looking good. It's funny. What do you think about Square? Let's take a look at Square really quick. See if I can give you a something on Square. That's symbol SQ, and that's one of two of the Dorsey stocks, the Twitter being the other one. Square has pulled. Now this is a reversal. By the way, I want to show you this. Now this, if you're looking on TikTok, you really need to jump over to YouTube to see this, because this is a classic reversal. Okay, I want to show you a classic reversal. You see how it moved lower here. It moved lower like that, and then we have this. We have this blue bar here. It's almost equal to the wicks are almost the same right there. This is going to reverse. So this is going to move higher after the election. So this is definitely on the watch list. So let me put that SQ on the watch list. I wouldn't buy this thing until we moved through the election. But if the election doesn't change anything, this one probably is going to move higher. It's 6 out of 9 and increasing fund ownership. So looking very good on Square. Thank you very much for that. Okay, I am basically, no, not quite 2 more minutes. Let me look at DGLY. Let's see if I can give you something on DGLY. DGLY. And let's see, Digital Ally. Interesting chart here. It is definitely moving down. It is a penny stock at $3.04. So I typically do not recommend these. But here we go. I mean, temporary line. Let me give that. Okay. Okay. So it's a downward trending chart as we can see. So we don't like that. It's got a relative strength of 95, though, so that's very good, and it's pulled back up. So the question is what to do with this. Well, if you're a penny stock guy, you can make some money on this. It does have a decent checklist. Well, not really that good, 5 out of 9. So it doesn't really meet that. You know what? I think this is a watch list. Digital Ally. I'm gonna I'm gonna see if I can get more information on this one. But right now, I don't think this is a buy. I think this is a watch list. Well, anyways, thank you everyone for showing up. If tomorrow, it's important that you all get out there and vote if you can. And on tomorrow we'll be doing our election special. So, see how the results come in on the election. We're currently in a market under pressure, so we have to be real careful right now. It's a good idea to be in cash to see how it's going to go. We could see a tremendous reversal here in the market. The market could take a dump here, depending on the election results. So I want to be very clear about that. Right now it's holding good, but it can change. So protect yourself in your positions. Remember, set your stop losses, because the pullback can be very severe and very fast. Now, it may not happen, but right now we are in a market in correction. So set your stop losses. And again, to set the stop loss, whatever you bought it at or where it's at, multiply it times 0.93. That's going to give you a number, and then you put that in as the stop loss. Good till cancel. So if it does pull back, that you're not ending up holding the bag. Thank you everyone so much for taking a look today. I'm on 2:30 till 3:30 Central Time, and on both on TikTok as well as YouTube and Periscope, and I'm also on Facebook and on Twitch. So I'm on all those things at 2:30 Central Time. If you'd like to subscribe to the Action Trade Alerts, it's super easy. All you have to do is go to is to go to www Dallas Trading Floor and just sign up on the website there, and that contains all the information for you to sign up for the trade alerts. And until tomorrow, thanks so much for watching, and I hope to see you again. Happy trading. Remember, get out there and vote tomorrow, and I will see you on tomorrow at 2:30.